welcome back to our Wednesday webinar, week 32. Now, in this series, we have talked about a bunch of stuff, okay? If you have not seen any of the past Wednesday webinars, we have them over on our YouTube channel in a playlist for you. Our 52-week Wednesday webinar is how we have it labeled. But in case you haven't seen a video, in case this is your first time here, let me give you a quick summary of the things that we've already covered in this series. So we've talked about credit repair. We've talked about how to raise your credit scores, good credit files, healthy credit scores, what mortgage lenders look for, how to get your mortgage loan approved, debt to income, budgeting, saving money for a home, applying for those mortgage loans, different types of mortgage loans. We've talked about down payment, closing costs. We've covered cash to close, the title companies and their roles, earnest money, option fee, option period. Let's see, seller concessions, buyer incentives, new construction versus resale. We've talked about property taxes, reviewed homeowners insurance, the importance of shopping that around every few years. We talked about PITI, the second year mortgage increase on new construction homes. We talked about how to select lots if you're going to build, choosing options at the design center, going under contract, what that looks like. We review information regarding home inspections, what to look for, how to prepare. We talked about appraisals, final walkthrough, closings in general, what to bring to closing. We talked about wire fraud, what to do post-closing. We talked about the homestead exemption and the importance of that, what that looks like, what you need to do to get that home exemption status. We talked about home maintenance all throughout the year. We broke it up by month, quarter, and annually. Then moved to sellers, okay? And we were seller-centric with what we were delivering in the Wednesday webinars. So we talked about, from a seller standpoint, how to prep your home for listing, pricing the home, repairs that you must do or maybe you don't want to do when you're selling your home and you're under contract and a buyer says, I want this home, but I need these repairs done. We talked about showings, open houses, feedback. We talked about what happens if your home's appraisal comes in low. We talked about HOAs, repairs, like I said, buying and selling simultaneously, when to turn off the utilities, prorated taxes at closing, CDs, and all of the things. That's a lot. And we are still going because there is so much to learn. And that was one of the main reasons that we came up with this webinar, is because buyers, not even necessarily buyers, I'm just going to say consumers, whether they were buyers or sellers or doing both or not wanting to do either, but just having questions. We wanted to give consumers a safe space where they could come in, learn, ask questions, and not have the pressure of someone saying, you ready to buy? Or calling their phone every day, every other day. You ready to buy? You ready to sell? We wanted this to be a safe space to learn and to ask questions regarding real estate, whether that is residential, commercial, land, all of the things. We wanted it to be here. And we have these Wednesday webinars every Wednesday at 7 p.m. sharp. And then we take the videos or the webinars and we put it in a YouTube video and we post that on Sundays. So you have it for playback, right? So in continuing with what we've been doing, today we are at week 32. And today we're going to talk about right here, what's on this screen. You got money hidden in your walls? Let's figure it out, right? We want to talk about growing your equity, building wealth, how to buy another property from your equity in your current home. And we want to speak to all the people who want to go from homeowner to investor. Now, we hear people all the time saying that real estate really is the road to wealth, but I rarely see any information, any videos that really give a blueprint, a step-by-step on a roadmap on how to do that. So we hope we can accomplish that today for you. So I've done all that. I've said all that, and I haven't even introduced myself. So let me do that now. If you are here for the first time, welcome. If you have been here before, welcome back to our Wednesday webinar. My name is Daphne Brown. I am the broker owner of Beyond the Home Realty right here in Rocheron, Texas, in Brazoria County. And today we're going to dive into one of the most powerful wealth building secrets available to everyday homeowners: how to grow your equity and successfully transition from homeowner to real estate investor. Your home is more than just a place to live. It is a critical engine for long-term financial freedom. In this session, we're going to break down 5 actionable strategies to accelerate your equity growth so that you can build real wealth and take your next major step in property ownership. All right? Sound good? Let us get started. Think about this for a moment. Today is the day you start shifting your mindset from simply owning a single family home to managing an active real estate investment. The beauty of leveraging home equity is that this transition can happen without you having to save a single extra dollar out of pocket. There is immense financial potential sitting right now inside your walls, the walls of your home. My goal today is to show you exactly how to unlock that hidden value to enhance your overall net worth and scale your personal wealth. All right, so before we get started, question time, and you can drop the answer here and I'll go back to it later. But the question is, does anyone actually know their current equity number? Drop it in the chat and then I'll come back to it after this, all right? Here's our roadmap for today's session. First, we will define what home equity actually means, and then we'll examine the primary drivers behind how that grows. Then I'm going to share 5 practical real-world strategies that you can implement this month to build equity faster. And then finally, we'll explore how to strategically deploy that equity to acquire your first investment property using a highly effective strategy known as house hacking. I'm sure you probably heard of that. Let's start with the basics. What is equity exactly? In simple terms, home equity is the financial gap between your property's current fair market value and your remaining mortgage balance. So for example, if your home is valued at $350,000 on the open market and your outstanding loan payoff is $250,000, you're sitting on $100,000 of equity. This is a real thing. The challenge is that it's hidden inside your property's value rather than sitting in your account at the bank, which is why we must learn how to strategically maximize it. Fundamentally, there are 2 primary levers that expand your equity. Way number 1 is real estate market appreciation. And this happens when macroeconomic forces, neighborhood demand, and inflation drive up property values over time, letting the market do the heavy lifting for you. Now, we saw a lot of this, for example, during I don't want to say the C word because I'm putting this on YouTube and they may strike it down. So I'm going to say during the pandemic, right? Because people were forced to work from home. I say forced. It's not like anybody had to twist their arms, but people were going to work from home. And so that meant that they could work anywhere, right? For most people. And so because of that, they were like, if I can work anywhere, I'm going to go to a state that has cheap real estate prices, cheap homes. And a lot of people chose Texas, right? And so when they did, we started seeing homes that were priced like crazy price. People were paying over the list price. And so that drove up our values in our area. And then way number 2 is your principal pay down. So every single month that you make a standard mortgage payment, a portion goes towards reducing your total loan balance. And when you combine the natural market appreciation with consistent principal reduction, you create a compounding wealth building effect. And now to win at this game, you need an absolute mindset shift. Most people view their monthly housing payment as an unrecoverable subscription expense, similar to like paying rent or utility bills, but it isn't a lost cause at all. Your mortgage payment, in fact, acts as a forced automated savings account that builds your net worth with every single payment that you make. Once you realize that your property is actively working for you, your long term financial strategy completely changes. All right, so now another little fun game. We're going to have a little fun with this. This is our myth versus fact quiz. So, true or false? Drop the answer in the chat. That's fine. But do you have to wait a full 30 years to tap into your home's wealth? Or can you actively manipulate your timeline? Answer that in the chat for me. I appreciate that. And so now we're going to uncover the reality behind how fast you can accelerate that process, okay? So we're going to break down the 5 major acceleration strategies to build your equity at a much faster pace. These all function by actively speeding up the 2 levers we just covered: accelerating your loan principal paydown or introducing forced appreciation through targeted property upgrades. We're going to look at making extra payments, extra principal payments, rounding up your monthly payments, picking high ROI renovations, so return on investment, ROI, and restructuring your personal debt to optimize your cash flow. And rounding off that list is number 5, the biweekly payment strategy. So instead of making one standard monthly payment, the way that you can enact this, you need to talk to your lender first to make sure that they accept, they call them partial payments. So you want to make sure that you have that conversation. But instead of making that one big monthly payment, you're going to pay exactly half of your mortgage obligation every 2 weeks. And see, because there are 52 weeks in a year, be with me, this subtle adjustment results in 26 half payments, which equals 13 full monthly payments instead of 12. So you made an extra payment. And if you do that every year over time, you are going to save so much on mortgage interest. You're going to shave off between 4 and 6 years on your mortgage, right? Which is great if you signed up for a 30-year mortgage, or hell, even a 15-year mortgage. Without squeezing your lifestyle, paying this mortgage bi-weekly, you effectively erase years off of your amortization schedule and save thousands in mortgage interest. If you want to accelerate your growth through forced appreciation, you must focus heavily on high ROI home improvements. Historically, updating kitchens and bathrooms yield the highest financial return on investment, immensely boosting your home's competitive market value. It also helps your home sell faster if you want to sell it, right? So on the cost-effective side, never underestimate curb appeal. We talk about that all the time on this channel. Basic upgrades like fresh exterior paint as well as updated landscaping drastically improve a buyer's perception and your property value without draining your renovation budget. Hold on, let me stop. A quick word of advice from someone who is not a I'm not a financial planner, but I play one on TV, right? But before you start dumping extra cash into your principal mortgage balance, prioritize wiping out that high interest consumer credit card debt, because that makes the most sense. Eliminating high interest liabilities first stabilizes your cash flow, strengthens your overall debt to income ratio, and builds a solid foundation for future real estate investment. Another pathway to fast track your equity position is considering a shorter term loan through refinancing. That's an option. I'm just telling you, right? Now, we talked on this channel before about refinancing versus recasting, and you can go and check that video out. But if refinancing is the road that you want to travel, you can shift from a traditional 30-year mortgage to a 15-year fixed rate term. And doing that dramatically increases the speed at which you build equity. Again, I'm not always comfortable advising a client or getting on their side about switching from a 30-year mortgage to a 15-year mortgage. I was when the interest rates were in the twos and threes, but now no way, Jose. And that is because you can still achieve the same goal having a 30-year mortgage paid off in 15 years simply by making double payments. And what you've done just by keeping it at 30 years but paying it off earlier is you've left yourself some breathing room should there be an emergency in life. Should life, right? You haven't committed yourself to that super high payment that will come with a 15-year mortgage. Because remember, if your 30-year payment is 2,000, your 15-year payment is going to be about 4,000. Now that we've talked about all of that, let's talk about the ultimate wealth catalyst, which is house hacking. And this is the process of using your current housing situation to acquire your next asset. And there are three basic ways to execute this. First, you can purchase a small multifamily property like a duplex or triplex or quad. You can live in one of the units and let the tenant's rent cover your entire mortgage payment or partially, right? While you capitalize on low down payment. Because on a duplex or tri or quad, you would still be able to qualify for a FHA loan and get in at 3.5%. Secondly, you can rent out a spare room or construct an accessory dwelling unit, like a garage apartment, letting a piece of your home pay for the whole asset. Now, this is only if you are comfortable. I'm not telling you to go rent your home out to a stranger, but if you have a friend or family member that's in a pickle and they need a place to stay, even if it's short term, that is something to consider, right? And then third, for established homeowners, you can utilize a HELOC or a cash out refinance to access your equity. And then you can use those funds as a down payment on a new primary residence and convert your current home into a cash flowing rental property. This is done all of the time. I see it all the time. And then from there, you can rinse and repeat and rinse and repeat. Now, doing it this way, you would seamlessly own two, in this case, appreciating real estate assets. If you rinse and repeat, 3, rinse and repeat, 4, rinse and repeat, 5. You get it, right? I want to share a real world story with you guys. And of course, I've changed the names for privacy, but I want to show you how this works in real time. So there was a couple, we're going to call them the Martinez family. They lived in their starter home for about 6 years, and they had built up roughly $90,000 in equity. Instead of selling the property to move up, they executed a smart cash out refinance to pull out funds for a down payment on a new home. And so today, their original starter home is fully occupied by tenants. The rental income completely covers that mortgage, and they're building wealth simultaneously on two separate properties. So that is definitely something that you can do. And I see it done all the time, especially people who got in on these 3 and 4% interest rates. They don't want to say goodbye to the interest rates. They're just like, let's turn that bad boy into a rental. Now, I do want to caution you, being a landlord is a real responsibility. So I'm not telling you to, do that, right? I'm just saying if it fits, we can have a conversation to see if that works for you. As a broker, I always commit to giving my clients truth. Managing real estate is a legitimate business decision. It is never a completely set it and forget it venture. Rental property management requires real responsibility, including thorough tenant screening, ongoing property maintenance, navigating local lease regulations, and planning for occasional vacancies. And it is incredibly rewarding, but it is work. All right. It does also pay to analyze your financial numbers carefully before you just jump down into that. But the number one thing is to make sure that your finances can support that. But then if you decide to move forward, I'm talking thorough tenant screening, because you can get a bad tenant and it makes the experience, it turns it into a nightmare, right? But if you have a really good tenant, you want to make sure that you are staying on top of maintenance. When they call you for things, you want to make sure that you are on it. Quick draw McGraw. I may do a video about that. I think I probably will. All right. So If you want to find out what your current equity number is, well, that's one of 3 steps that I want you to do this week. And then step 2 is going to be pick one acceleration strategy. All right. Step 3, if house hacking sparked something, give me a call. Let's map it out together. We'll map out what your next move should be. Now, I want to thank you so much. That is the end of this webinar. That went really fast, right? But I want to thank you so much for spending 30 minutes with me. Please let me know if you have any real estate related questions or concerns. If there's a video that you'd like me to create, if there's a topic that you want me to touch in our webinars for the remainder of the year, let me know, and I'll be happy to get that done for you. Next, I think I'm going to really look into a house hacking video to see if I can put something together and include it in this webinar. But I do want to tell you, I do appreciate you giving time to this webinar. If you have any family or friends that have real estate related questions, if you think this webinar can help them, please pass this information on to them. Tell them we're here every Wednesday at 7 p.m. But if they can't make it, because I know school is starting back, then those videos are posted every Sunday. But no matter what you do, for all of your real estate needs, remember that I am your homegirl, Daphne Brown with Beyond The Home Realty, and I am always ready and willing to enable you to find your way home. Till next Wednesday, guys. Bye-bye. So today, more
Coming
homeowners
up
are
next
becoming
week.
landlords than ever before. Some on purpose and many purely by accident. So tonight, we're going to make sure that you have the exact math so you never have to guess.
This window, I've been doing my best, taking a moment to rest, feeling stressed out. Give it a good, I put that on God when it gets hard. I stay on my job like no days off.